real estate is unique in that way because other investment vehicles teach us to mathematically insert risk. For instance, two mutual funds, you would never compare an aggressive growth stock mutual fund with a growth in income, okay? And if you look at the chart, the growth in income is kind of like this, and the aggressive growth is like this, right? And that's the risk factor. And the highs and lows on that, y'all probably know this is called, for our audience at home, the rapid change is measured by a thing called a beta. And a beta is a statistical measure of risk. It's a math number. And so a beta of 1.0, for those at home, means that particular mutual fund is exactly what the stock market is. It's S&P 500. It's doing what the stock market's doing. A beta of 2.0, it means it's twice as risky. So this is an aggressive growth, emerging market type stock fund portfolio. And so it's twice as risky as the market. So the way you would adjust for risk between a beta of a 0.8, which might be like a growth in income, versus a beta of 2.0, is you insert the beta in an inverse in the math formula, and you adjust for risk so you can compare these two apples to apples, even though after risk, a post-risk analysis. We don't do that in real estate. No one ever talks about that in real estate. It doesn't even come up. And so but we have kind of a brain, and our brain says, oh, wait a minute, if I'm 110% leverage in real estate, that's probably not good,
Where would you say the risk is, though, let's say on a 3% mortgage or an interest rate that's below inflation? Because from my perspective, it seems like there's less risk in having cash in the bank than tied up in a property that might not be as easily accessible. That in the event of a job loss or something happens, you'll have cash that you could easily access, versus in a property where it might be difficult to take out. Like if you need the money, like something comes up, and it exceeds your emergency fund, that maybe it's harder to tap into if that's your last case resort.
Well, the difference is, are we talking about the shortest path to bankruptcy or the shortest path to wealth? What you're describing is not going to lead you to bankruptcy. And so it's a nuanced argument at that point.
Okay.